All right, guys and gals, time to get back to work. It's about that time of day again here, after all. Monday evening, it's May the 4th, 2020. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a great video in store for you guys and gals tonight. The charts are all ready in the background, as you can see. We got some oil, we got the S&P, and of course that yellow metal, the gold futures. We're going to cover everything in the video tonight. We'll get ready for tomorrow's trading session. And speaking of tomorrow, we've got a bunch of news on the calendar for tomorrow. A couple of the news events tomorrow, though, you don't want to worry about. We're going to take a look at the calendar and make sure you know what news tomorrow and the rest of the week you've got to be ready for the best trading opportunities. So it's great to have back with me here. Hope you guys had a great weekend out there, but it's time to get back to work. Charts are ready. Calendar is ready. Good to have you with me. Before we jump into the video tonight, though, please don't forget, make sure you subscribe to this YouTube channel. That way you never miss another great video. And don't forget, if you have any questions, drop those questions down in the comment section below. I'll circle back and answer all the questions after I publish the video tonight. And as always, if you tune in every evening on this video, hit that thumbs up button for me. Always appreciate you guys showing the love, hitting that thumbs up button for me every evening on this nightly newsletter. But let's not waste any more valuable time. Let's get this video going. I'm going to kick off the video tonight. Let's check the calendar for tomorrow. That way you know what's on the schedule and you know what to be watching for the most important information tomorrow morning. Now, tomorrow morning, of course, is Tuesday. It's the 5th day of the month, Cinco de Mayo, as well known here in the southwest of the United States. But it's the 5th day of May tomorrow. You'll notice we get some big news tomorrow morning at the international trade number at 8:30, the ISM manufacturing number at 10 a.m. Eastern time. I wouldn't worry too much about that international trade number at 8:30, but I would definitely make sure you're at your desk tomorrow between that 10 o'clock to 10:30 block, because you got the ISM manufacturing index tomorrow at 10 o'clock Eastern time. And remember, anytime you see those three letters, ISM, you know you're going to have to be paying attention. So if you could only be at your desk tomorrow for 45 minutes to an hour, you definitely want to make sure you're at your desk tomorrow around that 10 o'clock block tomorrow. What we'll be looking for is how the market responds to that news tomorrow at 10 o'clock, and we'll go forward and trade from there. Keep in mind, we don't trade the news. We trade the reaction to the news. We're looking for setups around 10:10, 10:15, 10:30 tomorrow will likely be where the big moves are coming. Now, that's the big news for tomorrow. As we go later on in the week here this week, get the big inventory report on Wednesday. That will definitely be on everyone's radar on Wednesday morning. As we go later on in the week, get the jobless claims report at 8:30 on Thursday. Jobs, jobs, and jobs. That's going to be one of the big headlines of the week. At this point, for the last 4 weeks, we've lost 30 million jobs, or there have been 30 million unemployment claims, not necessarily, right, 30 million jobs. That number comes out later on in the week. We find out just how many jobs actually were lost in that big tumble regarding the coronavirus with our big non-farm payroll number at 8:30 on Friday. So tomorrow, ISM at 10 o'clock, Wednesday, 10:30, we got that jobless claims on Thursday, and of course the big jobs report on Friday. Those are going to be the big news events here for this week. So tomorrow you definitely want to make sure you're at your desk bright and early. We'll get the charts all prepped up and we'll be ready for the action coming in at 10 o'clock Eastern time. I'll tell you though, there's also a lot of kind of undercurrents thrown through the markets here right now. We talked about last week, we talked about this blame game from the US and China. I mentioned this last week. It has now begun to pick up steam, pick up momentum. A lot of blame going back and forth right now between the U.S. and the Chinese about whether or not they knew about this virus and did nothing, or whether or not, right, they couldn't contain it and it was their own fault. There's a lot of people right now that are pointing fingers, and that is definitely something we talked about it last week, right? Last week we heard from the U.S. President Trump talking about he's seen evidence. It began in that Wuhan lab, right? Chinese responded over the weekend. We're pointing fingers back and forth right now, and that's going to be a big kind of theme running through this week here this week. Also, to the reopening, right, of not just the economy in the U.S., the economy all over Europe and most of Asia. We're hearing more about the reopening plans. That is something that is spurring the demand for things like crude oil. So that is definitely a big theme we're watching here this week. And again, jobs, and more jobs. What will those numbers look like on Thursday and Friday? How bad will they be? Will they exceed our dismal expectations, or will they beat those expectations? I think the biggest thing is, as we go later on this week, everyone's expecting a bloodbath in these jobs numbers. Do they overperform, right? Do they surprise us, right? Being better than people thought. If they're better than folks thought they were going to be, I would expect these markets to keep on rallying on increased optimism of warmer weather, less virus spread, reopening of the economy. That'll push oil. That'll push S&P and possibly gold back in the opposite direction. So it's a lot going on this week, as you can see here. Got some big news again tomorrow. I will definitely be listening in to see how the blame game continues between these countries, right, and China about the virus spread and, of course, right, the reopening of the economy. Now, tomorrow morning, we're going to be together like we are every morning, 8 o'clock Eastern time in our trade room. I'll put all the membership information for you down in the description of this YouTube video. We trade together every morning, 8 o'clock Eastern time with all of our members. You got to be a member to join. I'll put all the information for you in the description of this YouTube video. Let's keep this party going, though. We know the schedule for tomorrow. Make sure you're with me tomorrow at 8 o'clock Eastern time, and we'll trade this stuff together. Jumping into charts here tonight, we get some oil, some S&P, and of course some gold on the charts here for this evening. I'm going to jump right into oil, though. Everyone's talking about oil. I was talking to some buddies here over the weekend, this weekend, right? Went to a little bit of a social distancing barbecue on Sunday morning. 6 feet apart, of course, right? We made sure to keep the distancing legit. But the bottom line is, all kidding aside, though, everyone's talking about oil. Everyone's asking me, right? Should I buy this? Should I buy that? What do you think about this? Everyone is talking about it at the water cooler, right, as they say. And so that definitely tells us that there's a lot of attention in this market. But I'll tell you, you wouldn't have known it today. Volume was pretty low on the oil market this morning, but I'm expecting to see quite a bit of attention in this market as we go into the rest of this week with the oil report on Wednesday, jobs, of course, right, being a big thing, and the opening of the economy, right? The more stores open back up, the more airlines get back on track, the more the demand and usually the price of oil will improve as well. So we know there is a lot of fundamental impacts of oil right now. What do the technicals tell us right now? The technicals make it pretty clear these buyers are in full control here right now. I think the most important thing to keep an eye, though, is where we are on this oil chart. You'll notice that range from last week. We finished up the week last week right around that 19.5 area. And you'll notice it looks to me like they've got a nice 1, 2, 3 breakout of that trading range. So at this point, it does look like the buyers are in full control. It looks to me like they've successfully broken free of that range. They've tried a couple times before and were unsuccessful. It does look like, at least what we know right now, the buyers have been successful at breaking out of that trading range with what I call a 1, 2, 3 breakout. But make sure you're aware, if this breaks down, if this thing evaporates and we end up back, right, collapsing back down again, that will put us right back into that range again. And we'll talk more about kind of what the plan for that stuff right here as we go through the rest of this video. So we know where we are. We're bullish. We're pushing up above the top of that range. If they hold, wonderful. If they fold, watch out for a collapse back in the opposite side of that range. Now, we know the market's bullish. We know we have a very strong move here. And of course, anytime I see a strong bullish move like this, I always expect to see another leg in the same direction. So really my goal right now on oil is I want to be a buyer. I want to find key levels of support, right? Like that prior swing high, like this hidden channel low, right? I like the idea of buying down inside of that battle zone, as I call it. And so that's going to be kind of the ideal buy here for me. I also want to be aware too that you'll notice we just kind of went up to that measured move here. And so we may start seeing, you could look at this and say this is 1, this is 2, this is 3 legs up. So I do think it's smart to keep your eyes open for a possible range up here, just because anytime a market goes 3 big legs like this, it does likely go sideways into a range. But again, like I mentioned earlier, with everybody talking about oil right now, it wouldn't surprise me if this thing continues to go higher here, just because of all the pure speculation we're seeing in the oil futures markets right now from everybody, really, right? Everybody's out of the woodworks right now to be a bull on oil. So if it does keep going higher, I want to make sure I have a good plan if this market keeps going higher as well. So really, to keep it simple, there's up, there's down, and of course there's sideways when it comes to this bull market. If I can get a pullback, that would be the ideal. If I could see a pullback off of these highs, what I'd love to do is get this thing underneath the moving average, down into my support zone here, wait for sellers to try to get short off the EMA. Once I see bears coming in trying to get short, now I know exactly where their stops are, and I can buy right into those stop losses. We call these failure patterns. So ultimately, that's what I'm looking for. I'm looking for a chance here now to get this price down into that buy zone, down to the low of that channel, get those sellers to try to reverse this thing, going back down into that trading range. I know exactly now where their stops are, and I can buy right into those stop losses. Now, we're not done from there. A lot of times it'll pull right back to that point of entry again and let you kind of reload the gun again, right? And let you hit it again with a pullback pattern. We call these failure into pullback combinations, and they're very, very common, especially when you finish that last move on a lot of strength. So with that big, strong move higher here, one of my options here is that failure pattern. Again, underneath the moving average, a seller failure into a bullish pullback, right, for a retest of that high. Another setup I'm watching for is if we do go sideways up here, if we end up going sideways on the chart, right, moving average starts to flatten out here, we start going sideways. Once I know I have a range, then what I'll do is I'll take the size of that range, and that will identify some key support levels below the range. Now, the key is to once you find the range itself will tell me where those key levels of support are. Then I can combine those areas with those channels and really stack those levels of support on top of each other. What's the best way to buy in a market that's bullish and goes into a range? My favorite way is I wait for the buyers to kind of run out of bullets, so to speak. I wait for the pullback once those buyers run out of ammunition, and then I look for sellers get caught trying to call a top. Once I see sellers trying to sell off the moving average, now I know exactly where those stops are again, and I can buy right into those stop losses. Another easy entry here, if we see it going sideways, look for a 2-try failure pattern underneath the low of that trading range. That'll be a nice, easy pick off of that low if we go sideways. But what if we don't pull back? What if we don't go sideways? What if this thing keeps on going higher here? There's a couple different options. The first one is if we keep going higher here, right, what I'll have to do is I'll adjust my channel. So that's the first thing. So if we do keep going higher, I'm still looking for that same, again, I call them seller failure patterns off the low of that channel. So if we do get this push going higher, I'm watching for opportunities to buy to get long off the low of that channel. But I do want to be aware, though, we may make a run here, right, for these big round number at 23, 24, 25 right now. If the market really makes a run higher, there's 2 basic patterns I'm watching for. One is a 2-try trap pattern, which will have a strong move up, a shallow pullback. That's usually the key here. That first pullback is shallow. Doesn't pull back to the moving average very much. Then we see that higher high. Once you get that shallow pullback with higher high, now you've got that 2-try trap pattern. It's a fantastic pattern, but you got to make sure this thing keeps going higher here. Get that shallow pullback, then hit it with that trap below that low. It's called a 2-try trap pattern. Another one of my favorites, if we, let's say, for example, we pull back shallow, right? We don't get a deep pullback and we run higher from there. If we pull back shallow, right, we don't get that full pullback that I want. If all it does is jump off the moving average, now I'm going to mark up that high. I'm going to mark up a new low, and I'm looking to get aggressive off the low of that hidden channel. So we call this a 1, 2, 3 breakout, right? Or in this case, it's a continuation of this breakout into a hidden channel pullback. So now we've got a pretty good plan here, right? I'm looking for seller failures for the buy back up. If we go sideways, I'm looking for 2 try failure patterns, right? 1, 2, back up from there. Do we go higher in that 2 try trap? Or do we get a shallow pullback and run hidden channel pullback? Boy, oh boy, a lot being covered here so far. And if you're a new trader, the most important thing to do is come out and do it with me tomorrow morning in our trade room. Again, we open up at 8 o'clock Eastern time, Monday through Friday. If you're not with me tomorrow at the opening bell, the next best thing though is to learn the strategy with our free trading course. I'll put a link for you in the upper right-hand corner here tonight. That will take you right over to the website. You can register as a member of our free trading classes. You'll learn my 4 favorite setups, my 3-step strategy. I'll send you hundreds of examples of how we apply that strategy to our favorite futures markets. If you're a relatively new trader or you still haven't been able to become consistently profitable and confident yet, if you're not with me in the trade room, you definitely owe it to your trade account balance to grab that free course linked up in the upper right-hand corner. And again, as I mentioned earlier, I'll put all the membership links, the free course links. I'll put everything right below this video tonight in the description of the YouTube video or right below the video on the trading blog. So now we know what the plan is for the bulls. How about the bears, right? How do I get short off these highs here? Can I get short off the highs? I can. We're right up at that measured move here. So we are at a major turning point in the market. One of my favorite reversal patterns is called a crown reversal. It's going to start off with a pullback to the moving average. The buyers will try to retest the high and they'll fail. They'll then pull back one more time here, and you'll notice these are lower lows in price right now. Now the buyers will try again. Once they try a second time now, watch for sellers to come in and try to pick those pockets up around those highs. We call these crown reversal patterns, right? Because the way they look like a crown. I'm looking for a trap off that high, nice strong signal candle closing below the moving average for the entry short. Now, this is a reversal pattern. It's a counter trend reversal pattern, which means in my world, that means I'm going a third of position, a quarter size position, right? I usually trade 4 contracts in the trade room, right? I'll trade 1 contract, 2 contracts, right? Something smaller, right, than we normally see, right? Something smaller than your full size position. That will help offset the lower probabilities of a counter trend reversal. Again, my favorite reversal pattern to get short off the high, again, go small on these counter trend trades because the odds are not going to be as reliable. Now, how do we actually flip the trend around? We can flip the trend by getting a strong move below the moving average, a pullback to the EMA, and a strong move off the moving average. What do we call those? We call those 1, 2, 3 reversals. Now, once we see that 1, 2, 3 reversal, remember, I don't like predicting reversals, right? I've got a crown reversal pattern, but that's about as reliable as it's going to get. Everything else, I want to wait for that 1, 2, 3 reversal, mark up that low, mark up that high, and I'm looking to get aggressive, right, off the low or off the high, right, of that channel. Where's my target at that point? My target is pretty obvious down at those lows, 18.15, 18.14, and change. So again, to get short off the highs here, it's that crown reversal, trap high, or it's that 1, 2, 3 reversal, mark the low, mark the high, and we're selling off that hidden channel high. Now we know what our plan looks like for the bull side, the bear side, here on the oil. Let's keep this party going. About some S&P here tonight. looking at the S&P 500, S&P is in a very interesting spot right now. What do we know about the S&P? We know we're bullish. We know we have a very strong move higher. And anytime we see a strong move in one direction, we almost guaranteed to get another leg in the same direction. And that tells me, of course, being a buyer, I want to buy at support. So you'll notice what I'm doing here. I've got some levels marked up, right? I got my prior swing high at that 14. I've marked up what looks to be like a pretty good fit to a hidden channel. That'll be a key level of support down there. That's a great level of support. I also have this smaller channel here because I do want to respect that bullishness. It's a very strong bull move, as you can see. There's a good chance you're going to see buyers coming in off this very shallow pullback here, and I want to make sure I'm ready with that as well. I think the biggest concern I have is the measured move. You know, we really don't have a lot of confirmation that we have much more than that measured move. You know, we got that big, strong pull up after that gap down. That's the measured move. For all I know, we're not going to get a lot more than that, and we'll get a deep, deep pullback. So, you know, what the point I'm trying to make here is that if I try to buy a shallow pullback right now, I'm sitting right at that measured move, and you can see how we're kind of sitting right there at some major highs right there. So if I'm going to be buying a shallow pullback, I got to make sure I'm doing it with a very reliable entry pattern. So knowing this, there's really a couple scenarios here. You know, do we go sideways up here? Do we see a shallow pullback up here? Do we see a deep pullback, right? Do we keep going? These are all questions I want to answer here tonight to make sure I'm ready, make sure you're ready, and we're ready to go together tomorrow morning in our trade room. I also want to be aware of what if we come crashing back down here and how to trade that as well. So most important thing right now is, what if we get a shallow pullback? There's a high likelihood that with this high, with that low, there's a high likelihood you're going to see buyers here coming in off of that low. My problem, again, is that measured move is right in my face here. So I have one type of pattern I always look for whenever I'm worried about buying high. And that's what I'm doing, right? If I buy up here, I'm buying relatively high. I'm not buying at support. I'm buying towards resistance. So what's the best way to buy if you're buying high? And again, we have an excuse to buy high here because it's such a strong bull move here, but that doesn't mean I can be too reckless on my entry. My favorite way to trade high in a bear market is to look for what I call a two-try or a nested two-try failure. And what I want here is I want a little trap low on this. Now, this is a loaded pattern. First of all, I've got to get a trap entry. Right? Trap entries are critical in this situation because we're right again up into that level of resistance. At the same time, I can see there's a gap underneath us, there's a range underneath us, and I would imagine bears are probably going to try a couple times here to run this thing back down into that trading range, thinking, justifying it by, we've gone too far, we'll come back into that trading range again. So most important thing is we got that strong move up. I'm anticipating another leg higher here, but I can't buy too aggressively. One try, two try. If I can get a trap low on this, that's a great potential shot going higher here. I call these trap setups, right? Trap setups, a two-try trap pattern. Now, what if we don't get that pullback? What if the market rallies higher here again? If it rallies right out the opening bell, I'm going to mark up that new channel. I'm going to mark up the low of that channel and look to get aggressive, right, at getting in off the low of that trading channel, right? That kind of hidden channel there. So again, if it does keep popping higher here, we have a pretty good idea of where this market is trying to go. That 28.57 level overhead is the next big milestone. And then from there, it starts to widen out pretty good until you get around that 2900. So we get some levels waiting for us overhead here. It really depends on how the market pulls back, if it pulls back at all right now. At this point, I know as much as you do. I know we finished right up near its highs like oil. Again, I'd like to get that two-try trap, right, for the buy off of that smaller channel low, or if it rips higher, I find that hidden channel and we're buying off the low of that hidden channel. Now, another thing to keep in mind here is we've got double tops already here. Because I see double tops, this could easily get dragged into a range. Now, make sure you think about where's my support. support levels there, right? So I got a bunch of support down here. If I see a range start to form here on the S&P, we've already got double tops. If we go back in and start going sideways here now, what's the best setup, at least in my eyes? What's my favorite setup in a range market? A 2-try failure pattern. Once we know where that range is, I can use that range to find my key level of support. I wait for the buyers to run out of bullets, as I always say, and I wait for the price to pull back. Once the market pulls back, now I know you're going to have bears here who are going to think this thing has reversed. They'll try to sell off the moving average, and once they do, we got them right where we want them. Now we know where their stops are, and we can literally buy right into those stop losses with a 2-try failure pattern. It's basically a breakout pullback that fails, right? The bears try for that breakout pullback pattern. Breakout pullbacks are very, very common among rookies. They love to trade breakouts. I fade breakouts. I go against those breakouts, right? Every time price goes below a range, you're buying. It goes below a range, you're buying it. Same thing on this example as we go higher here as well. Then, what if we do get that deeper pullback though? I'll tell you, I really like this big range. I hope we get a chance to buy off the low of it. I like this big range. It fits well. It looks good. My only question is, though, will we get a deep enough pullback here? You know, that's the only question I have right now. Whenever I have a really deep pullback, or whenever I'm anticipating a deep pullback, I always expect to see one of two patterns. The first one is going to be a two-legged pullback. We go down, we go up, we go down. That's where the term two-legged pullback comes into play. I'll draw the trend line off the high. I'll look for it to go up and over so I can buy that trend line. Again, we call these two-legged pullbacks, or 2LP for short. They're very, very common whenever you have deep pullbacks off the high. Now, we may not get that two-legged pullback. It may just simply pull back here nice and strong. If that's the case now, what happens? It's a wide channel, and whenever you see that much momentum going lower now, I could get aggressive, right? The aggressive entry would be a simple seller failure, right, off the low of that channel into a bullish pullback. That would be the aggressive entry, at least in my eyes, on that, because it would be a relatively deep pullback. I think we'll be more reliable in this situation if we do get a really deep pullback all the way down in. You see, I'm kind of concerned about this range, right? I'm concerned that's going to start dragging this market back into that range. It's a deep pullback. The range is a magnet below. I'm going to look for those nested failures from this one. I'll look for 1 try for the bears, 2 try for the bears. Now, I don't necessarily need to trap on this one, but I really do want to make sure that the bears try once, try twice. Then I know exactly where their pain points are, and then I can sell, I can buy right into those stop losses. Right where those bears are waving the white flag, uncle, right? Where they say, let me out. Where those bears get out, that's where I want to be getting in here. That's where the most reliable profit is to make on those deep pullbacks. Wait for the counter trend sellers to kind of rope themselves in, and then wait for them to fail and buy right into those stop losses. Another thing to keep in mind too, some food for thought on this, when we get those deep pullbacks off the high like this, they almost always will snap. So once those bears try once and try twice, and once they fail, the market a lot of times really jumps as it goes higher here. You don't want to chase after it as it jumps. Obviously, we look for that failure pattern. But if you don't get, if for some reason you don't get the failure, or you're already in the failure, look for that little 2-try trap here. This is a very, very common pattern, of course, right? Once we go through those highs, right? So if we get that nice strong run up, the way I always describe it is bears pull back. That first pullback is usually just a little bit above the moving average, right? Higher high in price, and then trap low. It's called a 2-try trap pattern. You almost have one right now on the S&P, right? You'll notice though, these are double tops. They're not higher highs. If that would have been a higher high on this, if this would have gone up, pulled back, and gone up again for a higher high, this would easily be a 2-try trap pattern, and buyers would probably be jumping all over it. But that double top, though, doesn't give me enough confidence here. You're going to see traps on this. And you see these patterns all over the place, right? So again, if we do see that deep pullback, right, that 1 try, that 2 try, that nested failure into that 2-try trap pattern, Again, bears try once, bears try twice. It's a trap below that low. And again, this will usually come just above that moving average, right, as we go. So now we get the buy side covered here. And again, don't forget, I cover all these patterns: failure patterns, pullback patterns, trap patterns. I cover all of these setups inside the free trading course. I'll put a link for you there in the upper right hand corner. And again, all the membership links for tomorrow's trade room, because you want to be there with me tomorrow to do it with me. I'll put all the membership links in the description of this YouTube video. Let's keep going here. How about a seller though? How can I be a bear on this? It's very similar, to be honest with you, to what we saw on crude oil. I'm up at a level of resistance. So what I can do is I can look for the crown reversal. Right? So one would be a pullback, one try here for the bulls, lower low, two try for the bulls, trap high. You got to have that trap, especially if you're going against the trend like this. And again, on a counter trend trade like that, you're going a quarter size, a third size, right? You're going the smallest size possible, one contract, right? Put some skin in the game, but not too much skin. You want to save that skin. You want to save the skin, right? You want to save those bullets. You want to save your capital, save your full size positions when you're going with momentum and those real A plus, right, trades we talk about in our trade room. Now, how can I get more momentum on my side? I can look for a reversal. Now, what's the reversal look like? Strong move down, right? Pull back and then go. If I can get that strong move down and I can get those bears to jump off the moving average now, that's the key, right? Remember, every time they keep pulling back, the buyers keep buying it up. Every time they pull back, the buyers keep buying it up. If the bears can hold that pullback and run, now we're on to something. Now we know we have reversal. I can mark up that low. I can mark up that high. And I can start getting aggressive selling off the high of that channel. Now, where's my target as we go lower? Back down to retest those lows, 27.71 and change down there. So being a seller right now is pretty straightforward. Either a crown reversal off the highs or a 1, 2, 3 reversal running down to new lows. I'm not in the business of picking tops, but that reversal pattern, that crown reversal, make sure again you wait for the one try, pull back, two try, trap low, trap high, and we're in right off the short side. So now we got a pretty good plan here. I think we got a pretty good plan here for the S&P. Don't forget, tomorrow morning and every morning, 8 o'clock Eastern time, I want to see you there with me. Last but not least tonight here on the gold. Gold is pretty straightforward here today. It's a bull market, as you can see from last week, into what is quite easy to see a trading range. Call it a triangle, call it a rectangle, call it whatever you want. We got overlapping candlesticks. We got flat moving averages. It's pretty easy to see this market is balanced with a bullish bias. Now, anytime I see a market that is bullish and then turns into a range out there, I know my best bet is to buy down underneath that range using failure patterns. That's always my best bet. And if I had to choose tomorrow, I would choose to do it around that trend line and that low right there. That would be the sweet spot. Okay, now that may take some time to go sideways here and then come down, but that is the sweet spot right there. You got that trend line and that low of day. That was today's low. I'll bet a lot of buyers are going to be drooling over getting long in and around that 1700 big round number here for tomorrow. That's the good stuff right there. We obviously, with a range, we want to stay away from the middle. And with a range, we've got to see a breakout, right? We can't just try trading breakouts because we know that range-bound markets, they're magnets. You know, we don't like trading breakouts because most breakouts are going to fail. The problem with breakouts is you can't quite tell a good one from a bad one before you get in. And then once you're already in, it's too late to take yourself out without a loss. So we look to fade the breakouts instead of trading the breakouts. Now, we know we're buyers. We know we're bullish into a range. What's the opportunity here right now? If the price keeps going higher, let's talk about going higher here. If the market tries going higher, we've got some levels up overhead here. Got some major tops up top at 1736. We got some major tops right up around That's 1745 and of course 1762. Make no mistake about it, the buyers have one mission this week, and that is to get back to retest that 1762. The question is, can they get through some of these obstacles on the way getting there? That's the big question right now. So if we need a breakout going higher, what's a breakout of a range look like? How do I know when it's safe to trade that breakout? There are two basic patterns I'm looking for as the market goes higher. One of them is a strong move up, a pullback to the moving average, and a jump off the moving average. If I can get that 1, 2, 3 breakout, again, you can't just buy the break higher because, well, that would have put you in the previous one, and it's not very reliable. So you got to wait for that pullback. Got to wait for them to hold that pullback and run. Once they get that successful breakout, then I can mark up the high. I can mark up that low. Now I know I can trust that second breakout. Right? So 1, 2, 3 breakout of the range. I can now buy the low of that new hidden channel. And keep in mind, when I say buy the low up there, if you were to kind of zoom in on that area here, there's the low of that channel. A lot of times, these will be those seller failures into bullish pullback combinations. So imagine now the moving average is right there, right? So imagine here that kind of blown up area, right? It's a seller failure into a bullish pullback, right, off the low of that channel. And again, I'm just simply drawing on the chart tonight. We'll trade this stuff together tomorrow in our trade room and every morning at 8 o'clock Eastern time. So that's a valid opportunity as we go higher. Another big chance here, let's just say, for example, we really rip higher. If the market really races higher, we know we've got that next major target at 1736. So if we do see this market just rip higher with big green candles, if it really runs higher here, watch that two-try trap. I'm not afraid of a two-try trap as long as I can get a lot of momentum on that move higher. You know, we may not get that 1, 2, 3 breakout. It may just rip higher here because of whatever comes out of Asia, right, or Europe. And so if we do get that 1, 2, right, strong move up, watch that shallow pullback, watch that higher high. Those are the combination you need to get a nice trap low off of that low. That should be a pretty reliable pattern as long as we get that strong break higher. So now we've got a pretty good plan of two setups I'm watching for as we go higher here. If we go sideways, I don't do anything. Right? We go sideways here. We sit on those hands. I almost hope we go sideways here in the overnight because like I mentioned earlier, I like the combination of that trend line along with those lows over there. If I could time the entry off of those areas, that would really make me happy for tomorrow. I'd love to see us pull back into the range, right? Get those bears now to think it's a breakout. It's not a breakout, it's just a pullback, right? Wait for those bears to come in and confirm and commit off the moving average. You don't need special indicators. You just got to learn how to use your darn charts. And once you see those bears coming in, now we know where their stops are. Now we know where their pain points are, and we can buy directly into those stop losses with that seller failure pattern. Again, it's like a breakout pullback pattern that fails and the buyers buy into the exits of those sellers. Now, another option would be if we really take a bath, right? What if the market really jumps down here? What do we do then? Well, remember, in order for this to be a breakout, they have to hold that pullback, right? They got to hold that pullback and go. So if they just simply collapse going lower here, there's no reason why I can't wait for a 1, a 2, and a nested right back up again. So if this market does make a strong run lower here now, but they're not holding that pullback and jumping for a 1, 2, 3 breakout, because if they do hold that pullback and we jump off the moving average, now it's a reversal. Now it's a breakout, mark up that low, mark up that high, and now I can be a seller off the top of that channel. But again, I can't sell the first one, right? That's not enough. We're bullish. We're too bullish right now to get short off that first pullback. You can try it, but it's not going to be the most reliable thing you've ever seen. I'd much rather wait for that proof of that breakout and then get short with confidence off the high of that channel than to kind of, close my eyes and hope for the best on that first pullback. But again, if we do end up kind of grinding lower here though, underneath, again, I'm talking about these trend lines here. These are my major support levels. But if we get down, a little bit below here, down into that, what we call secondary battle zone down here, that 95 to 88 area, well, now momentum's a big deal. I still know that trading range, that range will still be a magnet, but I can't mess with that momentum. That momentum's way too strong just to try to buy into it. So what I'll do is I'll wait for that nested failure. I'll wait for the bears to try once. I'll wait for them to try twice. Once we got bears trying twice on this, now we know they're fully committed, right? They're fully committed. A lot of times what I'll do is I'll look for a hidden channel, and I'll purposely try to wait for the bears to come in and sell off of those hidden channels. Because again, once you know the bears are committed, now you know where stops are, and now it's a pretty easy buy at that point because you know they're already in. You're not trying to pick a bottom, right? Picking bottoms in a bull market is a fool's game because you never know how far it'll go. Right? It'll oftentimes, as it pulls back, you buy too low, you buy too early, it gets you out, and then it goes back up. So, I'm not a big fan of trying to time the bottoms here. You don't need to pick the bottoms or pick the tops. You can wait for those failure patterns. And in a bull market, don't try to thread the needle being the first one in down here. Wait patiently. Wait for the one, wait for the two. Yeah, you're not going to get as big of a move, right? You won't be buying the lowest print of the day, but nobody cares about that. There's no trophy for getting the best entry, right? The trophy is your bank account getting bigger at the end of the week. So wait for more reliable setups there. At least that's what helped me the most when I was a rookie. Rather than trying to force everything, just wait for what you know really works. On a deep pullback like this, right? It's those nested, right, failure patterns. Now, we know how to buy this thing now. How do we sell this market? That's the challenge here. We know we're bullish. There's no doubt about that. So there's really two ways to get short on this. One of them is going to be with a 1, 2, 3 breakdown, as I mentioned earlier. Mark that low, mark that high, and we can sell off that channel high. That's a pretty easy one. We talked about that a bunch of times. Another one, too, would be if the market really collapses, right? If it really collapses, big, strong run lower, and we get that two-try trap here. Strong move down, shallow pullback, lower low. Okay, now I can start getting more aggressive right on that two-try trap. Be aware though, it takes a little bit of experience to know whether or not it's a grind lower into a nested, or whether or not it's a rip your face off, collapse, right, kind of melting down there. That's a very different type of move I'm describing here, right? Those moves where it looks like everybody's out, everybody's piling in on the sell side, shallow pullback, lower low, and of course that trap high to go from there. I think that will be a great setup if we get that strong bloodbath, right, of a move as we go lower. And then how do I sell off the highs here? First of all, again, I don't try to pick a top on this, right? We don't try picking tops. We know where that top is. We know there's a range, and that range is a magnet. Okay, so that's the setup here. Want to get up into that high of day, get up into that range top here, and wait for those buyers now, right? Let them wrap the rope right around their neck. Let them try once off the moving average. That will not retest the high. Pull back. Try twice. Now you look for that trap off that high. The bare minimum here would be a double top. I always look for those traps because the traps are always the most reliable because at that point, we know the buyers, right? The buyers are buying low. If you're focused on selling high up here, you'll be able to avoid a lot of the easy stop outs, absorb some of the, again, you're going against the trend here. You got to absorb some of the buyer pressure in that and let it collapse back down in. Once you see a nice juicy red candle here, all those buyers who are in, they're going to get forced out and the market will collapse back down into that trading range. But again, don't try picking those tops and bottoms here. Wait for the proper failure. Let the other side of the market dig their own grave and then trade directly into those exits. It's a lot more reliable and a whole lot less stressful. Picking tops and picking bottoms is such a stressful strategy. You probably have already noticed that, right? You're on the edge of your seat. You don't know how big your stop needs to be. You don't know how big your target needs to be. I'm stressed out just thinking about buying, right? Picking tops and bottoms here. So hopefully you'll learn, right, to avoid that easy mistake that a lot of rookie traders, myself included, when I was a rookie, I was always trying to get the low print, and it wasted a lot of time and a lot of money. We don't need perfect. We just want profit, right? We don't need to get the whole move. Just give me the big chunk of it that I know I can trust. All right, so now we're looking pretty good. The oil's good to go. S&P's all ready to rock. Gold is locked and loaded. Now all I need is you tomorrow morning with me in the trade room. Our advanced membership course includes all of our video classes, all of our trading sessions, right? You got to get registered though tonight for tomorrow morning's trading session. I'll put all the membership information for you down the description of this YouTube video. Don't be afraid to call me tonight if you have any questions. Don't let that ugly mug scare you away. Call that toll-free phone number, right? Send me an email, jump on Skype. And don't forget, too, we've also got that live support tool on the right-hand side of the website as well. And as always, guys and gals, it's great to be with you. If membership isn't quite right for you, make sure that at the very least today, grab that free trading course as part of our free trial. Learn the strategy, learn the setups. That way, when you come back and see me tomorrow, we can make the most out of our time together. Don't forget, subscribe to the YouTube channel. Hit that thumbs up button for me and type those questions in. If you got any questions, that'll do it for me tonight. Have a great rest of your evening. Hope I see you tomorrow morning at the opening bell in the trade room. If not, we'll see you guys tomorrow night on the next edition of this nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And we'll see you guys next time. Adios, amigos. Bye-bye for now.